Good morning, ladies and gentlemen, and welcome to the financial results announcements for Safaricom PLC for the year 2023-2024. On behalf of our Board of Directors, the management team, and the Safaricom staff, we thank you very much for joining us in person and virtually for this event. My name is Caroline Wambugu. I serve as the Head of Financial Planning Analysis and Investor Relations here at Safaricom. I will be your moderator for the day. And speaking of technology, allow me to introduce my co-moderator for this morning's announcement, Zuri.
Thank you, Caroline, and good morning to everyone following us online or with us live here at the Michael Joseph Center. I'm glad to be co-moderating this session alongside you today. Before we kick off, as Safaricom's Smart Assistant, it is so exciting to see the AI-inspired Chapa Dimba TVC play, especially ahead of this weekend's Rift Finals happening in Nakuru. The competition is truly hotting up this season. Back to you, Caroline. Cheza kama wewe.
Thank you, Zuri. Thank you, Zuri, for warming up the room. It's always a pleasure to moderate with you. Ladies and gentlemen, allow me to outline the agenda for this morning. We will start with remarks by Peter Ndegwa, our Chief Executive Officer, who will give a business overview delving into our purpose and strategy. Our Chief Finance Officer, Dilip Pal, will then take us through the financial performance results for the period under review. Following this, our Chairman, Adil Kawanja, will give his closing remarks. Thereafter, we will have a question and answer session for those in the room and the rest following us online. For those following us online, share your questions with us through the Menti platform, so www.menti.com, and use the code that is displayed right now on your screen. The code, I'll read it out to you as well. It's 577636682. And also for your comfort, you can just scan the QR code and it will still take you to the same platform. Zuri, would you kindly guide the audience on how we can engage with us throughout the day?
Gladly, Caroline. Should you like to keep your social media followers updated, our hashtag today is hashtag SafaricomHYResults. For those in the room, we have free Wi-Fi provided for you within the Michael Joseph Center to facilitate this. The Wi-Fi username is Mgeni and has no password. Simply agree to the terms and conditions to enjoy the brilliant connectivity that Safaricom offers. In staying committed to our promise of diversity and inclusion, our sign language interpreter today is Susan Kadenyi Ubaga. Before I hand back to you, Caroline, as you know, I am the voice of virtual care at Safaricom, and in this role, it is my job to put a smile on our customers' faces. And because sharing is caring, allow me to share my compliments with Bella Genge of Reuter, beautiful pink blouse. Baiju Shah of Apollo Asset Management, I see you there in a blue suit. Almost as lovely as today's performance announcement. Back to you, Caroline.
Thank you very much. Zuri, I can tell you you're putting smiles on our faces this morning, so thank you for doing your job so well.
Thank you.
Allow me to now welcome our Chief Executive Officer, Peter Ndegwa, to make his presentation. And by the way, Zuri, you haven't made any comment on him.
I was saving the best for last. Look at that red tie. Welcome up, Peter. Looking dapper this morning.
Indeed, putting smiles on our faces. I was going to comment that Zuri was not complimenting me, or Dilip, especially Dilip. So thank you, Caroline, and thank you, Zuri, for those remarks. So I'll start. Fellow shareholders, representatives of the investor community, the chairman, the board and management and staff of Safaricom Group, members of the media and the online community, good morning. Good morning, those in the room. That's better. Just before I start, I thought I should say it's great to see Chapadimba really doing well. I know there's a final this weekend, the Rift final, gaining momentum, and it's our biggest investment in sports this year. So it's great to see us going back to football. So it gives me great pleasure to present our half-year financial results for the period ended 30th September 2023. Before I start, I would like to acknowledge the presence of Safaricom board members, both the Safaricom PLC board members, but also the Safaricom Ethiopia board members, those present in the room, but also those who are calling online. Let us start by looking at the environment we operated under. During this period, there was an accelerated pressure on the consumer wallet. This was largely driven by challenging global and local macroeconomic factors affecting inflation and exerting pressure on consumer wallet and spend. As a result, businesses have also been under pressure, having to deal with rising energy and foreign exchange costs whilst balancing between operating an efficient business and also cushioning customers at a tough time. Let me turn now onto our purpose and how we have partnered for a sustainable future. Our commitment to the society remains at the core of our operations. This is evidenced by the sustainable linked loan that we recently announced. The 15 billion Kenya shillings loan is the first of its kind and the largest ESG-linked debt facility undertaken in the East African region. This funding will unlock our ability to create a more diversified investment profile. It will also support our investment in innovative technology and allow us to manage our ESG footprint. Let me now see how we have supported our communities. Through our two foundations, both the Safaricom and M-Pesa Foundation, we build a footprint across the country, benefiting millions of Kenyans. We are transforming lives as evidenced by our community investment in healthcare, in education, and in economic empowerment. During this period, Safaricom Foundation turned 20, whilst the M-Pesa Foundation, which has been in existence for 13 years, continues to provide long-lasting, transformative impact through large-scale projects. Ladies and gentlemen, let us now look at our strategy and its execution. We are in our penultimate year of our vision of being a purpose-led technology company. As you see shortly, we are cementing ourselves deeply into the tech space through our tech-led initiatives. We are now in the process of crafting our next phase, which is our 2030 strategy, which will identify our next phase of growth. The results that you'll see shortly represents the strong performance in Kenya and commercial momentum in Ethiopia. This performance is attributed to great execution of our strategy. Some of the key highlights in Kenya, including the launch of a youth platform, Safaricom Hook, and also accelerated rollout of 5G. In Ethiopia, the introduction of mobile financial services and mobile data contributed to this momentum. Together with M-Pesa Africa, we partnered with Sumitomo Corporation to launch the Spark Accelerator that aims to support early-stage startups to grow and scale their businesses. To support tech ambitions, we are building a world-class digital talent. During this period, we held the Safaricom Engineering Summit, dubbed Decode. We showcased our digital talent and fostered partnerships within industry. Together with local mobile network operators and international device manufacturers, we recently launched the first of its kind device assembly plant in Kenya. Our aim as Safaricom is to connect over 20 million customers with 4G-enabled devices by 2025. We also seek to support Kenya's digital agenda as well as serve regional export needs. We believe that a smartphone in every person's hand will act as a pathway to accessing endless possibilities on the internet and essential services by governments. This plant will aid us in bridging the digital divide, spurring economic growth, and fostering innovation. Let us now double-click on some of the performance indicators. In Kenya, we continued creating enhanced value for our customers in a tough economic environment. We've added value to our customers by offering bundled propositions that are individualized to the customer's usage and habits. Some of these offerings include Tunukiwa, Gomoka, and others. We have accelerated 4G development from both network and handsets access and are driving innovation that benefits the customers. We've also invested in relevant partnerships to drive more usage and penetration. From financial services perspective, we continue to scale consumer solutions through our payments, wealth solutions launched during this period. This is part of our commitment to improve financial health whilst delivering value to our customers by ensuring the solutions are customized and relevant for them. On the MSMEs, we've accelerated the use of Pochi la Biashara. We've also seen an increase in the number of merchants using this service. We continue providing business tools and connecting merchants to opportunities. We've worked very hard to scale technology solutions for the benefit of Kenyans accessing government services. We are supporting Kenya in digitizing and enabling access of government services through the use of technology. This includes, but not limited to, simplified access to affordable credit, as well as services in critical sectors such as health and agriculture provided by both county and national government. We continue to onboard more services with the aim of supporting Mwananchi access all services digitally. We are committed to being a trusted partner of choice for enterprise, especially MSMEs. We are driving growth for enterprises by offering innovative, connected technology solutions such as cybersecurity, cloud services, Internet of Things, amongst others, that create efficiencies for these businesses. Now, turning on our attention to Ethiopia. Let me start by introducing Wim van Hellepart, our Safaricom Ethiopia CEO, who I would ask to stand and wave to the team here at Michael Joseph Center. Thank you very much for welcoming Wim. Wim is attending his first investor briefing since joining us just 2 months ago. I thought it was longer than that, Wim. Despite the challenges posed by hyperinflation, macroeconomic factors, and an evolving political landscape, we are encouraged by the progress that we are making at a national level. Like many other economies in emerging and frontier markets, the economy in Ethiopia remains promising with significant business opportunities. Although inflation is high, we note the downward trend with the lowest levels recorded since 2021. We take cognizance of the return to normalcy and the return of economic activities in the Tigray region, giving us an opportunity to accelerate our network and commercial rollout. Looking at M-Pesa in Ethiopia, since switching on M-Pesa in mid-August, we've registered just over 1.2 million customers. With only 35% of the country being financially included, our strategic vision remains to deepen financial inclusion and promote a cash-light economy. M-Pesa strategy revolves around 5 key pillars: establishing a widespread agent and merchant ecosystem, delivering a superior customer experience, enabling digital payments and integrated solutions, supporting e-commerce and remittances, and finally, offering digital financial services. Ladies and gentlemen, some of Ethiopia's performance highlights. It's now 1 year since we launched commercial services. We made fair progress and gained good commercial momentum since then. This momentum is largely driven by mobile data and M-Pesa though coming off a small base. We are particularly encouraged by the usage levels in mobile data. Such levels have only been realized in Kenya after 10 years of operation. In September, Ethiopia data usage was higher than that of Kenya, having closed at 4.3 gigabits per customer compared to 3.7 for Kenya. On network, we have rolled out just over 2,000 sites as at the end of 30th September. This is equivalent to about a third of the network that we have in Kenya. Ethiopia is full of opportunities. For us to achieve the impact we expect, we must reach as many Ethiopians as possible through network expansion, customer acquisition, and relevant propositions. Indeed, we've accelerated our distribution and partnership model to ensure access and reach across the country. We are very pleased with the optimism that the internet has evoked in a youthful population of Ethiopia, as evidenced by the mobile data usage levels. We've also been very deliberate in ensuring that the customer experience, including the onboarding journey and how our services are offered. Let me now have a look at the performance for this half, which ended September 30th, 2023. Our group service revenue recorded a very impressive double digit at 10%. This was driven by a strong Kenya service revenue, which grew 8.5% year-on-year, and Ethiopia commercial momentum getting it to 10%. Ethiopia commercial momentum based on customer acquisition and M-Pesa switch-on. This confirms what we've been saying, that Ethiopia from now on will start being accretive to the group results. We've hit double-digit growth for both Kenya's business earning before interest and taxes and net income, which closed on 14.9% and 10.9% respectively. Our group net income, excluding minority interest, grew 2.1% to 34.2 billion Kenya shillings, which is encouraging. At this moment, I'll now invite our CFO, Dilip, to take us through the performance in greater detail. Dilip, if you can join.
Thank you, Peter. Good morning, everyone. Habari ya asibui. I'm delighted to present our financial performance for the first half of the financial year ending on 30th September 2023. As Peter mentioned, we have delivered excellent results, and I'll spend the next half an hour or so providing you with an overview of our accomplishments. Before we begin, I would like you to know that all the detailed results material will be available and accessible in our website immediately after this session. Now, let's dive into the numbers. So, during the first half of the year, we have achieved strong results, demonstrating resilience in the face of challenging macroeconomic environment. We navigated through economic headwinds, including high inflation, rising energy cost, weakening Kenya shilling, and also high interest rates. This, of course, impacted our financial performance. This period has also seen some notable developments building on events from the previous fiscal year. You would recall mobile termination rate, which was implemented, which changed from 98 cents to 99 cents to 58 cents from August 1, 2022, have now completed a full cycle, resulting in a negative impact over a 4-month period from April to July of this financial year. The reintroduction of charges for M-Pesa transactions to and from banks, initiated on January 1, 2023, has improved our M-Pesa performance during the first half, and that you will get to see now. And driven by our effective execution of business strategies, we have delivered exceptional results in Kenya. An impressive year-on-year service revenue growth of 8.5%, which becomes 9.3% when adjusted for the MTR impact. And robust double-digit growth in EBITDA at 13%, EBIT at 14.9%, and net income at 10.9%. At the group level, including our Ethiopia operations, at a consolidated level, we have achieved double-digit service revenue growth, as Peter has mentioned. I will delve into Safaricom's performance in Ethiopia later. In the past 5 years, our service revenue has its share of ups and downs, largely due to disruption caused by COVID-19 pandemic and also introduction of free M-Pesa related services transactions to support the tough economic conditions for our customers. However, if you look at the chart on the left, we can see that things are returning to a pre-COVID level. This is despite the fact that we have optimized our pricing. Our rate per megabit has reduced by 65% since H1 of 2020, and our voice rates are down by 44% in the same period. While this was towards making our products affordable, but this was also to ensure that we reduce our price premium over the competitors. We have reintroduced fees for M-Pesa transactions, although we have kept the rates lower to see that our customers are not burdened. For example, we reduced M-Pesa tariffs by approximately 61%. The 8.5% year-on-year growth in service revenue can be primarily attributed to the growth in M-Pesa, mobile data, and fixed data revenues. If we exclude the 4-month negative impact of Kenya shilling 1.1 billion for MTR, our service revenue, as I said, would have shown a growth of 9.3%. We'll provide a more detailed explanation of the specific revenue lines in the upcoming slides. Moving across to the charts on the right, that shows our service revenue profile. M-Pesa now accounts for 42.1% of our service revenue, up from 39% last year. Now, let's focus on M-Pesa. It's a crucial part of our business and has played a major role in our growth. M-Pesa revenue achieved an exceptional 16.5% year-on-year growth. This growth was delivered by a few key factors. Starting with personal payments, This category basically includes transfers and withdrawals and makes up almost 65% of M-Pesa revenue, grew by 13.5% year-on-year. Business-related payments such as paying bills, purchases from merchants increased significantly by 40.2%. This growth was mainly due to reintroduction of charge from wallet to bank and bank to wallet, and also more merchants using Lipa na M-Pesa services. The number of merchants in this period grew by 22.3% to 658,000. Global payments represents a smaller portion of the M-Pesa revenue, which is about 2%, grew by 9.5% year-on-year. This was possible because more people are sending money internationally, and we expanded our international payment corridors to 200 markets. On the other hand, financial services category saw a 19% dip year-on-year, primarily due to price optimization of our Fuliza product. If you exclude Fuliza, our financial services revenue grew double-digit. Although, even for Fuliza, the value of disbursements went up by 33% and ended at 419 billion for the half year 2024. Now, of course, this is possible because we made Fuliza affordable and also fit for solution to the market. Fuliza customers grew and reached to 7.5 million as at end of September 23. Now, let's dive into usage of M-Pesa. This is very important to look at the velocity in the ecosystem. The ecosystem continued to expand with the total value and the volumes of M-Pesa transactions growing by 1.1% and 34.7% year-on-year, reaching 18.3 trillion Kenya shilling and 12.9 billion transactions respectively. So value increased to 18.3 trillion Kenya shilling and volumes grew to 12.9 billion transactions. Of the 18.3 trillion in transactions, 10.1 trillion were chargeable, which is 55.4%, reflecting a 64.3% year-over-year growth. It is important to note that, as expected, we registered a drop in the transactions value to bank and from bank by about 29%, valued 1.1 trillion Kenya shilling. And this drop is not significant given that this ecosystem, you would recall during the COVID period in the last 3 years, has actually grown by 140%. The bottom right chart shows that the total of 12.9 billion transactions in the period, 5.6 billion or 43.1% were chargeable and grew by 45.4%. And the left chart shows that the chargeable transactions, which is a very important parameter for monetization and the revenue growth for M-Pesa services, chargeable transactions per 1 month per customer, per 1 month active customers grew from 22 to 29, which is a growth of 29% year over year. And it's not too long ago, pre-COVID, our average transactions per customer per month was anything between 10 to 12. So it's almost like 3 times in the last 3 years. We continue to invest and drive innovation of new products as we increase our service offering to customers. Still continuing on M-Pesa, our journey to digitize payment platforms and embrace technological innovation is on track. Our M-Pesa apps play a very, very significant role in digitizing and transition to support consumer lifestyles and business transactions. The consumer app goes beyond transactions, offering 76 mini apps for added convenience and e-commerce. It's gaining momentum with 8.5 million downloads, 3.4 million active users, with 1.6 million revenue-generating customers every month. Kenya shilling 5.2 billion revenue from apps, 936 million transactions, totaling 897 billion in value. An impressive 96.2 transactions per 1 month active customers, compared to what I talked about, 29 transactions per customer per month on an average in M-Pesa ecosystem. The Business Super App is also gaining momentum, featuring 1.3 million downloads and over 142,000 active merchants, generating Kenya shilling 333.5 million in revenue and facilitating over 28.9 million transactions valued at 143.4 billion. Please note that more detailed information on M-Pesa's performance, you can refer to the results booklet, which will be available on our website shortly. Now, let's shift our focus to mobile data, a crucial growth area for us. Mobile data also performed exceptionally well with a double-digit growth of 12.5%, fueled by increased usage. As Peter mentioned earlier, the widespread adoption of smartphone is a cornerstone in propelling this growth by providing an enhanced customer experience and driving usage. We are pleased to report that number of smartphone users has grown 11.4% year-on-year, reaching 21.4 million. Of these users, 67% utilize 4G devices, which has also grown 19% year-over-year, and 510,000 uses 5G devices. The average usage per chargeable data subscribers grew by 11.7% year-on-year, reaching 3.8 gigabits per customer per month. 9.2 million customers now use more than 1 gigabits per month, marking an 8.7% year-on-year growth. Data ARPU was stable, driven by a 16.6% growth in chargeable customers, which has now crossed 20 million marks, reaching 21.4 million customers at the end of September. Our rate per MB has decreased by 9.8% on year-on-year to 6.2 cents. Just for information, on a half-year basis, this is the slowest decline in rate per MB we have ever witnessed, ever since we launched mobile data, making data more affordable for our customers. Our customer value management initiatives and big data analytics have significantly improved our ability to provide targeted offerings to our customers. We continue to support customers in acquiring 4G devices through our affordable Lipa Mdogo proposition, which has now crossed 1 million mark. With the launch of 4G smartphone local device assembly, we anticipate a significant boost in smartphone penetration across the country. These developments, ladies and gentlemen, signify our commitment to enhancing customer experience and fostering a greater connectivity in the digital age. Now, let's explore our fixed services, another essential growth sector. Our fixed business revenue has shown a year-on-year growth of 9.1%. When we adjust for certain one-offs from the previous period, the underlying growth is a growth of impressive 14% year-on-year. Fiber to home saw a significant growth of 29% year-over-year. The chart on the top right indicates that active customers, fiber to home active customers grew from 173,000 last year to 223,000 this year. The chart at the bottom right provides insight into our fixed enterprise business. While there was a marginal increase in the number of customers, we acknowledge that there is still significant growth potential in this sector. As I mentioned, there was a one-off last year, and if we normalize the one-off, the enterprise segment also grew by 8.7%. We recognize the vast opportunities for expansion of fixed and have already embarked on various initiatives, including IoT and ICT, as Peter mentioned earlier. These advancements highlight our commitment to enhancing our fixed service offerings, expanding our customer base, and venturing into promising technological domains. Moving on to now voice and messaging revenue, I would like to highlight our strategic efforts to support our customers during these challenging macroeconomic conditions. We have consistently optimized our pricing to ensure that our customers can enjoy the most value at competitive price points. This approach has been our long-term commitment. To deliver our promise of value, we have engaged our customers through various campaigns and provided integrated bundle propositions. During this period, our blended rate decreased by 14.6% year-on-year to 1.28 shilling per minute. Our messaging rate remained stable compared to the previous half. We observed a 21.6% year-on-year increase in voice usage, very, very commendable in a situation where voice usage is going down generally, but we managed to grow voice usage by 21.6% year-on-year to 184.3 minutes. And if you look back historically, you'll see that barring one or two half, we grew our voice minutes every single half year. Messaging revenue saw a growth of 6%, which again, we reversed the trend from a decline from a couple of years back. This is driven by integrated bundle propositions that we are offering to our customers. Looking ahead, it is possible that these two revenue lines may follow a pattern similar to what happens in the mature market. Nonetheless, our strategy is to focus to ensure that we keep our market share, which is stable currently at 66%. Our customer-centric approach, pricing, and value propositions remains unwavering, even in the face of evolving market dynamics. Looking at new growth areas, we have continued to focus on accelerating new growth areas to complement the core. We have witnessed increased momentum with impressive growth trajectories. The M-Pesa new growth areas, which include the Pochila Biashara, business transacting tills, and the merchant credit facilities, recorded a growth of 54% year-over-year, reaching the Kenya shilling 1 billion mark in revenue. Content revenue more than doubled in the period, recording a 700 million revenue, mainly coming from video streaming services, our Beige platform, gaming subscriptions, and educational content. Our IoT business, which majorly serves the enterprise clients, also grew the revenue by 26%. You see a decline in cloud and hosting, but as I mentioned, there was one-off in the last financial year. If you normalize that, actually cloud and hosting also grew by 26.7%. We are dedicated to being a trusted partner for our customers, a one-stop shop in serving our SMEs, MSMEs, and large corporate segments of the economy, offering them comprehensive solutions to meet their diverse needs. Now, let me give some highlights on our costs, especially noting the macro effects that I spoke about and Peter spoke about. As per the graph shown on the left, our costs grew by 8.7% year-over-year, mainly driven by increased network operating cost, lease cost, and foreign exchange losses. The network operating cost was mainly driven by rising fuel and energy rates. And if you exclude the impact of energy cost, our operating cost would have grown by only 1.4%, which is much below inflation. Net foreign exchange losses reflect the 22% depreciation of shilling Peter spoke about. The graph on the left shows that our direct cost declined 11.5%, driven by decreased handset sales due to higher taxes imposed in the Finance Act 2022. Excluding handset sales, our direct cost dropped by 1.8%, driven by efficiencies targeted at mitigating the rising operational cost. We continue to look for opportunities to create efficiencies through sustainable initiatives that will lock in value into the future and cushion external micro impacts of the business. Now, moving to the balance sheet, a bit on the debt and the finance cost. We have seen our finance cost increasing due to rising interest rates. The table on the left gives you a good view of our debt position. We closed debt position at 89.8 billion and our net debt position was 74.9 billion. We have taken measures to reduce our foreign currency exposure due to the depreciating currency by reducing our foreign currency exposure. You will recall that in FY22, we took a USD 400 million bridge facility to finance our Ethiopia license investment. In FY23, 30% of that was converted to a local dollar facility, about 120 million. And I'm happy to note that we managed to pay off the entire dollar-denominated loan, which is actually helping us to reduce our exposure in foreign currency. We, however, must deal with the challenge of managing the rising interest rates, which has led to an increase of 48.5% in our finance cost. We have already started taking some deliberate steps on this with the recent sustainability-linked loan of Kenya shilling 15 billion. The rates for this loan will be linked to our sustainability targets and will be therefore below market rates. Now, looking at the key KPIs, just to reiterate that Safaricom's Kenya's key performance indicators remain very strong and have been stable over the years. Our innovations and customer propositions are supporting the top line in delivering increased revenues. Our productivity initiatives have helped us to cushion the growth on the cost side to deliver improved margins across all KPIs. Our EBITDA and EBIT margins at 55.9% and 41.5% respectively, recording marked improvement year over year. These are the best margins we have ever recorded. Our OPEX intensity is one of the best in the industry at 16.8%, which demonstrates our focus on productivity is paying off. Our return on capital employed stands at 55.3%, giving us good headroom to support our investment activities. Now, let's switch gear to Ethiopia. Peter spoke about a lot in terms of our commercial execution and our site rollout. It's been a year since we launched Ethiopia, and we are encouraged by the momentum recorded in H1 24, confirming the great potential that we see in this market. With the increased sites and coverage now, population coverage to 30%, our customer acquisitions have continued to grow and consequently usage and revenue. As you can see from the chart, pretty much all KPIs are on upward trend. 90-day active customers, 30-day active customers, they are all doubling. So we closed our 90-day active customers to 4.1 million and 30-day active customers to 2.6 million. We have recorded excellent usage on data, as Peter mentioned. Exit September, we are better than Kenya, and overall, we recorded 3.1 GB per customer per month. Voice use is still low at 63.8 minutes, and it is not unusual to have lower voice minutes simply because we still don't have the scale of customers that needs to enable that network effect. As Peter mentioned, we also launched M-Pesa in August, which had recorded 1.2 million registered customers. We shall give a farmer update about M-Pesa during the Q3 update, as we do normally a quarterly update for Ethiopia in January, and how this segment is faring, since it's still very early days. Now, looking at the revenue and ARPUs, the key highlight here is that we are a data network, and 69% of service revenue is coming from data. And data ARPU is also quite good at 180 shilling per customer per month. And just to remind you all that we are not far off from Kenya as far as data ARPU is concerned. So what is required is more customers coming in, and then we are able to increase the voice usage, which will enable us to grow our ARPU. And I remember this conversation when we did this in half year or full year last year, that ARPU is low. Yes, we said that ARPU is going to be low, starting with, and then over a period of time it grows. And remember, M-Pesa has not yet finally taken off in the scale that we need. And you just to remind all of you that these numbers are consolidated in the overall group performance, inclusive of the hyperinflationary adjustment. So just to reiterate again, Ethiopia is still under hyperinflation environment, and I'll talk about that later. Now, coming to our funding and the medium-term outlook, we continue to explore and assess optimal funding for the business. I can confirm you business is well-funded, and with a combination of equity, deferred vendor payments, and our DFIs contributing, and also commercial banks from local side is helping us to take care of the funding needs. As we have previously updated, IFC is now an equity partner in the GPE consortium, which are with our other consortium partners with a 7.25% shareholding. And having concluded the discussion in Q1, and they have made their first equity payment tranche in August this financial year. Their entry, of course, diluted shareholding of the other consortium members, with Safaricom PLC now holding 51.67%, down from 55.71%. We are still majority shareholder, and we're still able to consolidate numbers in the group in Kenya. The new ownership percentage have been applied in the calculation of minority interest at the consolidated level, effective this financial year. At the end of September 23, total contribution by the consortium members was $1.6 billion, of which, let me repeat, $1.6 billion contribution by all the consortium partners, of which Safaricom share is USD 833 million. And this includes also the contribution for the M-Pesa license that we have acquired. We'd also like to reiterate that our medium-term outlook remains unchanged. The current macro situation does not adversely impact the projected outlook that we had assessed this business to deliver. CapEx projection still remains 1.5 to 2 billion US dollar. Site rollout, we have now 2,057 sites. We believe we will be ending in 10 to 10 years, about 10 to 12,000 sites. And we still maintain our EBITDA break-even target of year 4 after commercial launch, which is year 2026. And we'll continue to provide regular information on Ethiopia quarterly basis as promised earlier. Looking at the group net income now, Safaricom Kenya net income grew by 10.9% to 41.6 billion. We have assessed an overall net income adjustment of Kenya shilling 7.7 billion as Ethiopia hyperinflationary impact. 7.7 billion. This is in combination of a hyperinflationary monetary gain of 13 billion and the income state restatement negative impact of 5.3 billion. So gain of 13 billion and negative impact of 5.3 billion leads to a net gain in income statement of 7.7 billion. The minority interest, as I mentioned before, is the new ownership structure. That is what you have considered. And if we exclude the minority interest, we grew by 2.1%, as you have seen from Peter's slide. The amount is 34.2 billion. Of course, this is due to consolidation impact. And as you know, Ethiopia is in investment phase and we have startup losses that we have to consolidate. Overall, I must say that Ethiopia performance is very well within our expectation. On CapEx, we continue to invest in our network and IT systems to support capacity upgrade and user experience. Our group capital expenditure in the period stood at Kenya shilling 41.9 billion, of which Ethiopia accounted for 42%, which is 17.4 billion. The Kenya shilling 17.4 billion supported sites rollout and other infrastructure required to support commercial momentum and expand coverage of the business. And lastly, I would like to mention of the impact that the conversion rate applied on Safaricom Ethiopia numbers at the group level and therefore on the impact on the group net income. The conversion rate we use is derived based on how our local currencies relate to the dollar. You recall the investment was made in dollar through our consortium. So we convert local currency to dollar and then dollar to shilling. And as you know, Kenya shilling has depreciated faster to dollar compared to the rate of depreciation of the ETB to the dollar, resulting to a higher conversion rate of 2.564. I mean, just to summarize, if you do just a constant basis, the constant currency, if you apply that, our group net income, which was shown as 2.1% growth, would have shown a 3.7% growth, as shown in the last column of the table, which is quite encouraging. Ladies and gentlemen, as I close, we are very pleased with the half-year 24 results, and we are looking forward to executing with the same rigor in H2. Just to mention again that the result materials will be available on our website shortly. Thank you for your time. Back to you, Peter, for FY24 guidance.
great presentation, Peter and Dilip. Peter, before you continue, allow me first to compliment Wim for matching his suit with his phone cover. And Dilip, you look sharp as always. I'll move to the other side and let me acknowledge the presence of Michael Joseph, beautiful maroon tie. Now back to you, Peter. As you speak on guidance and outlook for anyone who wants a summarized ChatGPT version of our results, what would you say are the main takeaways from our half-year performance?
Thank you, Zuri, and also thank you, Dilip, for a great presentation. And thank you, Zuri, for that reminder. I think the thing I'll say is that we are extremely pleased with the performance that we have delivered at a group level. And I just wanted to summarize a number of things that have gone well. So we have delivered very strong performance at a group level, which is primarily because we have offered more affordable services to our customers. You'll have seen that we have reduced prices across the board as we've gone back to charging on M-Pesa by 61%. We've reduced data price in the past 3 years by 65%, and also voice in Kenya by 45%. And in addition to that, using CVM, we've been able to ensure that customers are able to get services and propositions that meet their needs in a tough economic environment. And also at the same time, we've also started to manage our costs in a significant way. And in particular, energy costs, we are solarizing our plants. We are now about a third of our sites on solar, and we intend to accelerate that in the next 2 years so that we will have all our sites on solar. In Ethiopia, we've sustained commercial momentum, and with the M-Pesa being switched on, we believe that now we are starting on that journey that we know has worked for us in Kenya, but we need to do it in a way that is truly Ethiopian and ensure that the full benefits of M-Pesa accrue to the population, to Ethiopians who we can ensure that they live their lives every day, but also enable business to operate. We've also in Kenya been a real digitization partner for the government, both as a customer, but also in terms of ensuring that our population access digital services, enabling our customers to access online services for business, but also from government. We look at digitizing government as a way of ensuring that our customers access services which they would ordinarily access in different ways, but access them digitally. And that's why it's so important for us to be involved. And also to support this, you know that mobile devices, and in particular accessing 4G handsets, has been a critical area that we've been focusing on. So we are pleased to be partnering for the launch of the device assembly, which we launched, which was presided over by the president recently. It will help us accelerate the smartphone penetration. You'll have seen smartphone, 4G-enabled smartphone grew by almost 19% on our network and is powering the very strong data growth that you see. So the ability to provide affordable 4G devices is really critical for the future of our business. And in particular, we believe that if everyone has access to the internet, then they can live their lives in the right way. And this would be a major area of focus. And finally, we've also optimized our operations, as I've said, managing costs in a way that is sustainable, in particular on energy, but also starting to manage the effects of foreign exchange movements that we are seeing. And then going forward, we'll continue to stay true to our strategy. We'll continue to focus on the customer, in particular the whole aspects of making it easier, making it simple, and making sure the experience is great. We will keep pushing on accelerating new growth areas. You'll have seen that we are making progress on IoT, ICT. We are making progress on some of the new areas on the financial services, and also fiber is looking good. We need to, although coming off a low base in some of these businesses, they will be the businesses of the future. We will continue to drive digital acceleration and digital transformation, in particular building capability, and also really investing in new capabilities in digital engineering, and you'll have seen a lot of that from my presentation. In a current environment where the global macroeconomic will continue to be a challenge, productivity will enable us lower the cost so that we can invest in further price reduction for customers. And we want to be seen as the technology partner of choice in digitizing Kenya and soon in Ethiopia. And in Ethiopia, ensuring we build commercial momentum, we continue to roll out the network and ensure that in time we stay within our business plan that we expected to deliver in Ethiopia. So we remain focused on executing our H2 performance, and we are pleased with the H1. Now I will move into our guidance. So with the improved performance that we have seen in this first half, we are revising our F24 guidance for Kenya for both earning before interest and tax, and also for capital expenditure. Our EBIT, which is our earning before interest and tax guidance, improves by 12 billion Kenya shillings from a range of 17 to 120 billion to a range of 129 to 132 billion Kenya shillings, which is a significant step up in terms of guidance. Our CapEx guidance also changes to a range of 45 to 48 billion, an increase, the majority driven by currency impact, because a lot of our equipment is imported, especially radio network, and related to the Kenya shilling depreciation. So that is purely on Kenya. This consequently changes our group guidance on EBIT to a range of 87 billion to 93 billion, and CapEx to a range of 85 to 93 billion, respectively. Safaricom Ethiopia guidance on both EBIT and CapEx remain unchanged. We have, however, in Ethiopia, reviewed our GSM customer target to 7 million from the earlier forecast of 10 million, largely driven because of some of the disruptions we've witnessed in the Amhara region. So we remain confident of meeting our Ethiopia guidance from a profit and also CapEx perspective, notwithstanding some of the challenges that we have noted. So in conclusion, I want to thank the board for their support during this period. I want to thank my colleagues here in Kenya, but also in Ethiopia, for their hard work, their dedication, and their commitment. To all our partners, whether those are dealers, suppliers, agents, thank you for your support and collaboration. And our partners include regulators and other partners that are external. Thank you for your support and collaboration that has enabled us to deliver performance and achievements that we have delivered today. To all our customers, I thank you for your continued loyalty and confidence in us. I look forward to your continued support during the second half of this financial year, and we seek to see the momentum that we've gained in H1 helping us deliver in the full year. I now invite our chairman to make his closing remarks, and he'll be doing that remotely. Thank you very much.
Fellow shareholders, representatives of the investor community, the board, management and staff of Safaricom PLC, members of the media and the online community, good morning. Thank you for joining us for the half-year 24 results announcement. Thanks to technology, the foundation of our business, we can virtually engage this morning as I'm unable to join you in person. A quick review of our business performance. We have delivered stellar results in Kenya and have managed to achieve key milestones in our Ethiopia rollout. The board is pleased with improved business performance, the highlight signified by double-digit growth in group service revenue. As Dilip said, we recorded double-digit growth across key P&L lines in Kenya. This is testament that our strategy is working well. In Ethiopia, we have seen a strong momentum trajectory, which points to the potential we see in that market. I'm well aware that the rollout of the network is on course and that the commercial teams are actively driving customer acquisitions. With M-Pesa now available, we can only expect to see greater acceleration and usage as we go into the second half of this year. It's worth noting that recording a growth of 2.1% in group net income, excluding minority interest, is also very, very encouraging. Ethiopia is going to be a key contributor to our growth strategy into the future. We have stayed true to our vision as set out in the 5-year strategy of transforming Safaricom from a telco into a techco. The macroeconomic environment has been difficult. The board expresses its appreciation and confidence to the management for maintaining its strategic focus. We are cognizant of the longer than expected headwinds and economic challenges encountered in both Kenya and Ethiopia. The global geopolitical issues, rising inflation, currency depreciation, higher cost of living have taken a major toll on our customers' wallets and strained most households. The Kenyan shilling depreciation against the dollar by 22.7% as of September signifies the tough operating environment that the business operated under. The board is aware that these challenges and continues to work with Peter and team to find innovative solutions to our societal issues and enhance revenue generation. We have also taken note of the notable policies and regulatory developments. We are encouraged by the continuous engagements we have with our regulators. The reduction in excise duty on telephone and internet data services was a welcome relief to our customers. We call on the government to also consider reducing the excise duty rate on mobile money transfer services. The conducive regulatory environment is important for our own growth, especially considering the rapidly evolving technologies. We remain committed to working with government, regulators, and other stakeholders to strengthen regulation in key sector issues such as mobile money, data privacy, spectrum, amongst others. Ladies and gentlemen, I will now speak about the board's commitment to supporting Kenyans through various initiatives. Transforming lives is at the heart of what we do at Safaricom. I'm proud of some of our numbers that came out of the recent sustainability report. Key among them being that our impact on society now stands at 14.6 times the profit we made in the last financial year of 62.3 billion. During this period, our philanthropy arm, the Safaricom Foundation, turned 20. Through the foundation, we have built a footprint in all 47 counties, partnered with over 4,000 partners, implemented over 4,000 projects, and have invested over 6 billion in Kenyan communities. These investments have impacted close to 10 million Kenyans. As we celebrate 20 years of impacting lives positively, we hope to inspire hope for a brighter future through sustained community engagements. The M-Pesa Foundation, which has been in existence for 13 years, has invested over 21 billion, impacting another 3.2 million Kenyans. In conclusion, ladies and gentlemen, allow me to congratulate the team that worked hard to deliver the East Africa Device Assembly Kenya, the first of its kind in Kenya. The recent launch by His Excellency the President was a momentous occasion, and the board looks forward to seeing millions of Kenyans benefit from 4G devices that are assembled locally. We will continue to work with the management to deliver value to our shareholders. We fully support Peter and his team as he executes the business strategy that will see us become a fully fledged technology company. The board would like to extend our deep appreciation to the management, stakeholders, and all the members of staff across the group for their efforts and commitment during this economically challenging year. Thank you, ladies and gentlemen. I will now leave Peter and Dilip to answer your questions. Thank you.
Thank you, Chairman. Thank you, Peter.
Caroline. Caroline, I do not think it's a coincidence that the first time I co-moderate this session live, we showcased the digital leaps we're making in producing these results announcements. What a beautiful virtual presentation by the chair. I've made sure to compliment stakeholders across the region to ensure my contract for the next 6 months is safe. And Chair, please put in a good word for me to Peter, will you? On a more serious note, over to you, Caroline, to kick off our Q&A session.
Thank you very much, Zuri. I see Zuri never misses an opportunity, to just put her pitch right there in asking the chair to put in a good word for her. So Zuri, I think I need to learn 1 or 2, 3 things from you. So ladies and gentlemen, we have come to the end of the first part of our half-year 24 results announcement. That was a presentation part. And so now, for the next 15, 20 or so minutes, we shall engage in a question and answer session. And just to remind us, and especially for those following us online, share your questions with us through the Menti platform. That is Menti, www.menti.com. It's right on your screen. And the code to use is 57763682. I'll repeat that again. 57763682. You can also scan the QR code. It will still take you to the same platform. For those of us in the room, I know you can still use Menti, but I would want to encourage us to engage. So there will be a roaming mic that will be taken to where you are, should you wish to ask a question. And I would want to really start with those in the room. But before we do that, allow me to now welcome back on stage our CEO and CFO for the question and answer session, Peter and Dilip. Wim to join them. Wim, if you could kindly join them. Yes, a seat is coming. So our CEO of Ethiopia, Wim, will also be joining them for the Q&A. Please be gentle on Wim. So for those of us in the room, questions, just shoot your hand up and a mic will come to you. I'm looking around. Yes, we have a question right here. There's a mic coming to you. Okay, we can start with you, Bella, and then we'll come to this side. Go ahead.
Morning, my name is Bella from Bloomberg News. And that's correct, I'm wearing a pink pull neck. Thank you for your presentation this morning. Bienvenue au Kenya, Wim. Enchanté à vous voir encore. I just want to ask that, Peter, if you could tell us what your outlook for the year, if you're able to say, and how, if you could tell us a brief on how the mobile money business is doing in Ethiopia. Are you able to tell us what targets you have by year end or by half year, whatever timelines you have? Thank you.
Okay, let's take a second question before Peter answers that. So there is a hand right here on this side. Please give us your name and the organization that you represent.
Thank you very much. I'm Eric Musau from SIB. And I think a commendable set of performance. I think congratulations to management. And one of the questions that came to mind when I saw the business payments up, and I think a couple of months ago I saw that comment around businesses ditching the pay bill numbers or Lipa and M-Pesa numbers, but I think the performance seemed to speak otherwise. Maybe you can just clarify that. And then on the device assembly, I was just wondering what your shareholding is and the strategy around that. I saw you highlighting 5G devices, and I think they're up over 100%. The device assembly plant is mostly focusing on, I think, 4G devices, but maybe you can guide around that. And just your sense about whether it's a business that is intended to be commercially viable as part of your new businesses and so forth. And then is your sense that the Kenyan economy is turning around? You've upgraded the numbers for Kenya. I mean, is your sense that despite all the challenges we are feeling, that the economy is quite resilient? Thank you.
Thank you. We'll take those sets of questions first, and I'll request Peter to kindly respond.
Okay. So thank you to Bella and to Eric for the questions. I will answer the easy ones, and I'll give Dilip and Wim the more difficult ones. All right. In terms of the that was on a lighter note. In terms of the guidance for the year, I'm assuming, Bella, you are talking about at a group level. Yes, we have already included in the pack, and I went through in my presentation on the guidance. And we guide on EBIT and CapEx. We don't guide on anything else. And that's why we say we're improving the Kenya guidance by 12 billion on EBIT. And also we are increasing the guidance on CapEx to reflect the currency impact, because a lot of our equipment is imported, at least the radio network and a number of the key equipment is imported. So we will give you reference to where the actual summary of that guidance is. In terms of mobile money in Ethiopia, I'll ask Wim in a minute to just give a flavor, not necessarily what the outlook is. Remember when Dilip presented, he said, it's early days, we've just switched it on. We haven't done what we would call above-the-line communication, which is when you feel that you have really fully launched the operation. But certainly it is being used in Ethiopia. But I'll ask Wim to talk about it in a minute. Then on the payments, I'll give that question on payments to Dilip. I'll answer the device assembly one. We are very excited to be involved in the whole device assembly. We have been looking for a way of seeing how we can really step change acceleration in device acquisition that is affordable. We have about 30 million 2G and 3G devices in this country. We have about 15 million customers who have unique 2G, they only use 2G devices. We will need to ensure that we have mechanisms of getting affordable devices in people's hands. We started with financing with Lipa Mdogo Mdogo, and that is actually gaining traction, not just from our own balance sheet, but also others are starting to come to participate in device financing. But we believe a bigger kind of initiative is required. So that's why we are very, very excited to be involved with the local device assembly. And our experience in the work so far that has been done on the assembly is we'll be able to make any device we want to make, because it's primarily assembling rather than manufacturing. And we'll start with 4G devices because that's the one we have the biggest need. We can go into CPEs, the devices that are used for home. We can make any other devices, but certainly the most important thing would be to start focus on entry-level 4G devices. In terms of our shareholding, we are at 25%. It doesn't, the actual business is not a significant investment, and I'll ask Dilip to talk about that. And our intention, it is more to enable the economy have devices rather than make lots of money from the actual operation. Clearly, when we start making other devices and also starting to think about exports, because this can be the hub for exports, then from an operational perspective, we could see an opportunity to commercialize that business a lot more. In terms of 5G, yes, we just have just over 500,000 devices, or just around 500,000 devices. So it's still early days, and the price point is still a bit high. We believe that will fall fairly rapidly in the next few years. And I think the biggest thing is to make sure that going forward, we include devices in the propositions that we give to our customers. And then I'll answer the question on the economy. You live in the country. There are some challenges that are going on. We've expressed those challenges in the way we've announced our results. Our business has shown resilience. Some of the benefits you are seeing in the performance that you see for Safaricom have been also the work that we have done in the past few years. We have continued to reduce price, especially on data and also on M-Pesa, as we have shown. That has created a wider base. You'll have seen on the M-Pesa side in particular, about half of our transactions are free. So there is a lot of value that we are providing. We are using big data and analytics to ensure that we can target pricing. So I would say that our performance is both showing a resilient business, but also better commercial execution in a challenging environment. And clearly digitizing and using digital services is one of the ways of dealing with some of the challenges that are being seen in the economy. And you'll have seen it with the significant increase in Lipa na M-Pesa merchants. So I'll ask Dilip to respond to one of the questions and then come back to him on M-Pesa.
Thank you, Peter. So your question on business payments, I think I did capture that in my presentation. Two factors. The first one is the expansion of the base, which grew by almost 30% to now 650,000 merchants who the customers are using their services. So that's one part. And second part is also recall the wallet to bank and bank to wallet being free as a part of the COVID relief, which has now been reinstated from January 2023. Of course, at a much lower rate than it was before. That has also helped us in accelerating the business payment section. Thank you. Wim?
Okay, thanks, Dilip. Concerning M-Pesa in Ethiopia, you'll appreciate we went live in August, which hardly a few weeks ago. So before making any projections, we first need to, of course, build the building blocks. As Peter rightfully mentioned, we haven't really gone ATL, we're just on BTL, which means we're building the customer base, we're registering customers, already more than 1 million. We are onboarding agents, we're already more than 20,000. We're onboarding merchants, almost 10,000. So those are the basic building blocks, customers, agent, merchants, that we are now putting in place. And then later on, the next few weeks and months, we will start building on that. So I think within the next 3 to 6 months, we'll be able really to give a better view on how the momentum is going forward.
Okay, so thank you for that. Another round of questions from the room. Any hand going up? Yes, I see a hand here. Let's have a mic. Another hand. Okay, your name, organization, then the question.
Thank you. Good morning. My name is Kefa Moirore, the Business Daily. 2 questions, one to Dilip. Beginning with Dilip, these are around financial services for M-Pesa. Noting that there was a deceleration there. I think point of note there is there were a reduction in Fuliza charges. That came down around September, so we would see that certainly at this point in time. But on the same note, we saw the Hustler Fund coming on board. And now around your financial services, you have quite a number of products which are very different, of course. Hustler Fund and Fuliza are quite different and not like for like. But if you comment on that slowing momentum of revenues, and perhaps if you'd offer more insight into what's happening, perhaps is it that the slower cost, given that transactions were up or the value of disbursements under Fuliza was up, that would help in terms of grasping what happened really in financial services. Then a question to Mr. Peter Ndegwa. I think there was a mention of from Dilip's presentation around, lowering your premium to the customer. And at this point, when we are talking of tough cost of living, people parking their vehicles, discretionary spending really coming under pressure. Given that already you are showing that you can still grow the business even after lowering some of those costs to customers, it is something you'd still consider going forward if that momentum in terms of activity still remains. Thank you.
Okay, so any other? Yes, I see a hand there. Let's take another set and then we can have those answered. Name, organization.
All right, good morning, everyone. Jimmy Mbogo from KTN. There's a question that has come up that is on the issue of Fuliza. You see that the number of customers has increased to 7.5 million. So in terms of volume, how much has been disbursed to those numbers?
Okay, so let's take those. Peter and Dilip.
Yeah, so I will take Kefa's. It's Kefa, yeah?
Yes.
Yeah, I'll take Kefa's question, and then Dilip you'll handle the FS deceleration and also the Fuliza question. So in terms of when you look at our business on data, we have reduced price by 2/3. That's the 65%. When you look at the cost of data per gig and compare it with the regional benchmarks, we are one of the lowest markets in terms of cost of data. So we believe that data is probably at around the right price. What we now need to do is to ensure that we enable people to be able to use data. That's why getting smartphones in people's hands, getting content, enabling customers to know how to use data and how to use the internet, enabling that both on the individual side, but also on the enterprise side will be key. From a price perspective, we believe we're in a good place. From a voice standpoint, we believe, and you'll have seen in Dilip's chart, that we have continued to reduce the average price on voice. That will continue. Voice is still in decline, although low single digit. We actually saw much more momentum in Q2, and I think there was a question about economy. If you use our business as a proxy, Q2 was a better quarter than Q1. I think that's probably the only thing I would say from an economic activity perspective. But certainly we saw voice improving in Q2, and we continue to reduce the price. So we believe that price reduction in voice will continue. On the M-Pesa side, we've had significant reduction, and we will continue to see opportunities to enable that value, to give more value to our customers, whether that is in the way they use our super app. You've seen that the people who use or customers who use the super app transact a lot more transactions than those who don't. So enabling better user experience, but from a price perspective, we'll continue to also see opportunities to either give more value or reduce price and rely less on transaction-based areas of the business on P2P and withdrawals, and continue to grow these other areas. Dilip, feel free to add if there's something I've left there, but also answer the question on FS deceleration and Fuliza increase.
No, thank you, Peter. I think you covered everything. So thank you, Kefa, for your questions. Yes, you noticed it rightly. The financial services section is a deceleration, but as I said, it's purely driven by Fuliza. So if you take out Fuliza, Fuliza is an overdraft product, but we still have the other, the loan products and savings and loan products, right? You will actually see, when you see the booklet, you'll realize that we were seeing a deceleration in those two, KCB and M-Shori. Now you will see a growth this year. So excluding Fuliza, lending revenue actually grew by 21%. So which is quite credible in a scenario of where we were reducing those lines. So the systems got upgraded, the customer limits also refreshed, and based on that we have seen uptake. Now, Now, Hustler Fund, I think you're... So Hustler Fund is actually, what it is doing is bringing in a lot more fund in the ecosystem. So there is a revenue that you earn, but that's not really significant in terms of the revenue share. But bigger activities come to the downstream activities which happen when the money comes in the ecosystem. The amount of disbursed is more than 20 billion, and 15, 16 million customers. Actually, there are the repeat users are more than 7.5 million. So it's a significant impact in our ecosystem development. We spoke about that last year as well when this was introduced. We saw many customers who are not using our services have also come back and started using our services. I think overall, I would say, yes, Fuliza is declined, but actually growth in disbursement by almost 30%. So Fuliza, even though the revenue has declined, but the actual disbursement has grown. And it was intended to be that way, that we want to make it more affordable and we want to expand the base, which is what is our intention, to make sure that the benefit of Fuliza is available to everyone. On the other questions on 7.5 million customers, so the amount disbursed, I think I mentioned about in my presentation, was 419 billion in the first half of the year.
Yeah, just to add on the credit side, when you look at customers and usage, we believe that the products are much more now sustainable because when you look at Hustler Fund, it's the most affordable credit proposition that customers have. Fuliza, for the first 3 days, you don't pay any cost. So really the affordability is a very big enabler of ensuring that the credit proposition is sustainable. So that for us is even more important. So once we lap that base, then of course going forward, when customers take more credit in the future, it is more sustainable. And that's the way we look at it.
All right. So I'll take some questions online, then I'll come back to the room if time will allow. But let me also just state that good compliments coming through. Well done to the Safaricom team. I'm proud of Safaricom. Good job, Peter Ndegwa and team. And we appreciate you for those compliments. But there's a question here to you, Dilip, on the dividends. I think you didn't mention anything on dividends, so there's a bit of jitteriness here. They're wondering, are we going to pay an interim dividend? Has the dividend policy changed? Have we now reverted back to first and final?
Do I go ahead?
Yes, please go ahead.
No, I wasn't expecting to answer a dividend question on this one. But I think just to, on a more serious note, just to reiterate, the dividend, we started an payment of interim dividend process some years back. We paid till last year. Will we pay now? I mean, I cannot comment on that right now because it's a process management goes through the board, which is normally we take a decision around January, February. So we'll hear about that soon. Unlikely that will change, but also to confirm that the dividend policy remains unchanged. So there is no change in the policy, the way we pay dividend. Whether we are paying interim dividend, normally we paid so far, and it's likely that we will pay interim dividend around the time we paid last year.
Thanks, Dilip. And to you, Peter, maybe supported by Wim as well. How do you plan to develop M-Pesa in Ethiopia, knowing that your competitors have had a head start?
I'll ask Wim to go for it.
Okay, as I mentioned, we just launched a few weeks ago, so we're still very much in the BTL phase, building the foundations, customers, agent, merchants. Of course, we have some interesting learnings, and we can build on experience and also knowledge from our Kenya Safaricom, the wonderful app. We have a very powerful app that we launched together, with Going Live. It's all digital. It's very, very user-friendly. So this will be one of the key differentiators that we're looking at, is to really enable a fully digital experience. We should be able to leapfrog. We shouldn't be trying to, go and the traditional legacy route. We have an opportunity to actually move faster. And from day one, offer M-Pesa customers a fully digital experience. So we're looking for key elements of differentiation so that we can, find our niche, find our place in the market to accelerate growth from that position.
Thank you.
Yeah, and Caroline and Wim, one element I would add is that although the incumbent has launched M-Pesa, it's still, as a country, if you think about financial services or digital financial services, it's a very early stage. When you look at what has happened in Kenya, what has happened in places like Uganda where we more, or other countries, there's still a long journey to go in terms of making it a cash-light economy, enabling merchants to use, for customers to use M-Pesa. The enterprise side is a very significant opportunity, as we've seen in Kenya. And the government side also, in terms of digitizing, but also enabling various ecosystems. It's always to remember that it's a very early stage. We just need to ensure that we are patient enough and build a business that is sustainable into the future, both on the payment side, on the credit side, and also beyond that.
Thank you, Peter. Thank you, Wim. I'll take a last round of questions in the room, then we bring the session to a close. I had seen a hand somewhere here. Yes? Name, organization, then your question.
Shadrach Manotti from Kingdom Securities. My question is on, looking on your financials, there is an effect from hyperinflationary pressure. What percentage of that could you account to, either Kenya or Ethiopia? And excluding of hyperinflationary monetary gain, what could your net revenue look like? Thank you.
Thank you. Thank you for that question. Any other last question from the room? Okay, thank you. Hyperinflationary, Dilip.
Yeah, that has to be a Dilip question.
So, let me try and simplify. So Ethiopia has been declared an economy under hyperinflationary environment, which means that if the cumulative inflation for 3 years exceeds 100%, you have to apply International Accounting Standard 29. So it is the accounting impact of IAS 29 that you see in the income statement and as well as in the balance sheet. When I was talking about net income for the group, so first of all, just to confirm, your first question is it for Kenya or Ethiopia? No, it's everything for Ethiopia. Yeah, at the group level, we take the impact of IAS 29 for hyperinflationary environment. Now, during the net income, the bridge that I have shown in the presentation, you have seen a positive impact of roughly 13 billion coming from the gain from the monetary assets. Yeah. So hyperinflationary environment assumes that your monetary assets. So basically, you revalue your assets and liabilities. But if you have a liability of 100 shilling, even in a hyperinflationary environment, you will still end up paying 100 shilling, right? So, which means that in an environment where it's inflationary, the value of money is coming down, so you need to make an adjustment for the non-monetary assets, yeah, and that's where the gain comes in. So gain of 13 billion, and then also you have to restate your expenses. So in the income statement, we also did about 5.3 billion of, so 13 billion of gain coming from revaluation, and then 5.3 billion coming from increase in the cost in the respective income statement. That leads to a gain of 7.7 billion. What I did not mention about is that when we calculate our dividend, which is payable to our shareholders, we exclude the impact of that. So you will see that income statement, the earning per share that we put, we also put something excluding hyperinflationary impact, because that's not necessarily available for shareholder. It is a gain or there is a loss. So yes, we at a net level in income, you have seen a 7.7 billion impact of that, right? So if you take out the half of that, which is a minority interest, so you would have seen in terms of 34 billion net income that you have reported, roughly about 3 billion impact of that would have come in there as a half of 3.5 billion, half of the net income impact that you have seen. But there is also an impact in the balance sheet where you revalue our assets. That also you'll see from the balance sheet that also gets reflected, that moves through the retained earnings and doesn't come to income statement. I know it's a lot of information for you, but just remember 7.7B net impact in income statement, and we do not calculate that as an available reserves for payment of dividend.
Thank you. Thank you very much, Dilip. Help me in appreciating our leaders, our CEO, Peter Ndegwa, CFO, Dilip, and Wim, our CEO of Safaricom Ethiopia. Ladies and gentlemen, that's the time we had for our question and answers, and in the interest of time, we'll close at that point. I know a number of questions have been posted. We'll definitely find a way to put in the responses so that you can benefit from that. And most of them actually are speaking to some of the things that have been presented here this morning. So this particular recording is available for you to rewind and view again, so you'll be able to also get some good responses from there. We'll also be having lots of engagements post this, so I'm sure we'll still be able to address your questions as we go along. For now, I would like to thank you for those questions, the comments, and the engagement, and also just reiterate that our half-year presentation and the detailed materials are already loaded on our website, so you can access them immediately after this. And once again, we appreciate you for taking time to join us this morning. A big thank you to my co-moderator, Zuri. So Zuri, before we go, where can customers and our audience interact with you post this session?
Thank you, Caroline. It was a pleasure co-moderating with you this morning. As an artificial intelligence chatbot, I work 24/7 to enhance your experience, and I'm available at the touch of a button. Should you need any assistance from me, let's chat on WhatsApp, Telegram, Facebook Messenger, and on web at www.safaricom.com, my Safaricom app, and SMS 100. Thank you once again, and back to you, Caroline.
Thank you, Zuri. On behalf of the entire Safaricom family and my co-moderator, Zuri, asanteni sana. I was your moderator, Caroline Wambugu. Do have yourselves a good day. Stay safe, and let us stay connected. Thank you.
ለዘመናዎቹ
ለታታሪና መለኞቹ
ለአዲስ አማራጭ አቅራቢዎቹ
እውቀትን ጨምረን ብልሃት ቀምረን እይታን አስፍተን ሀገርን አቅንተን አሰራር አርቀን ሰብን መስጠን አቁመን
መልካም አዲስ አበባ
አብረን ማርሹን ቀይረን
ለማርሽ ቀያሪዎች በአዲሱ ዓመት በ07 መስመራችን ማርሻችንን ወደ ስኬት እንቀይር። መልካም አዲስ ዓመት። ሳፋሪኮም በአብሮነት ወደፊት።